Why is the pension fund of San Francisco divesting from coal shares? New strategies for emerging markets or how to wash your hairs without water? Does climate change lead to write-offs for certain companies? Is there a Google Earth for my portfolio? What is not listed on my investment report? And how can one optimize performance and make a meaningful investment? Learn more in the GloBalance webcast with Reto Rinker, founder and CEO from GloBalance Bank, in an interview with Kiki Meder.
Mr. Rinker, your bank states that it's possible to achieve more with money than just a return. Money can invent, money can heal, but money can also destroy. You say that money or an asset leaves a footprint behind and that it's possible to measure this footprint. Now, we live in a world where returns and security are the measure of all things. So why do you believe that to an investor not only the return is important, but also the footprint and the impact of his assets?
I can give you a little story on that subject. Recently I met a very wealthy private investor and we discussed his investment result of last year. And he mentioned that he lost 10% with a hedge fund and he lost 10% with an investment in a small firm in the water sector, and that he would sell his hedge fund because he doesn't know anyway how they invest their money. It's very transparent, and he would keep and increase his investment in the small water firm. And even though he's very performance oriented, he has a very high interest in also that an investment is meaningful. And I think that's the case with more and more investors. And also companies are being measured whether it's meaningful what they do. Take a company like Unilever. They have clients that wash their hairs every day, brush their teeth, make cooking, and everything takes water, which is a scarce resource. And Unilever, as an example, they are now developing products where you need no water or less water, and that's an interesting company to invest for the next generation.
Definitely, that totally makes sense. Now, what about the return? Many investors assume that their return is lower if they invest in companies which are engaged in environmental issues. Is this the case, or what is your opinion about that?
No, they don't have to compromise on return. It's the opposite. And it's not only about the environment. As an example, it's also about your clients, your employees, about your environment, about political leaders in a country where a company operates. So those things has become more and more important for most of the companies. You have to have a certain acceptance. And when it comes to performance, there are numerous analyses that state that you have the same or even a better performance if you invest in sustainable companies. One of the most prominent studies is from Harvard University. But there's a special reason why people have the perception that there's an underperformance if you invest in sustainable companies, and we can see that on the chart. We can see here the investment performance of 3 different strategies. One strategy invested in a water strategy, that's the S&P Global Water Index here. Another strategy invested in clean energy companies, that's mostly the renewable sector. And the other strategy is a pure equity index strategy measured here by the MSCI World. And we can see that the most successful strategy was the water strategy. Unsuccessful was the clean energy or renewable strategy. And in the middle was the equity strategy in a pure world equity portfolio. So one reason why there's a perception that sustainable strategies underperform is because of this renewable energy underperformance. A lot of investors have been invested in those strategies, and it would be a mistake just to take the clean energy strategy as a representative for a broader sustainable investment strategy. So one lesson is for sure that you have to diversify across various sectors.
So why was this underperformance of the clean energy, and what is your opinion about the future?
I mean, one reason is, of course, that there was a hype at a certain period in this renewable energy sector. People were hunting a few firms. The valuation of the firms was very high. They could not deliver the results. There was an overcapacity of solar cells. China entered the market and offered very low prices. So the hype stopped and prices came down. And therefore, it's very important that you diversify. Actually, the sector the valuation of the sector is more reasonable, but still, there are certain risks, political risks, but also the risk we have with the strategy of Chinese companies. So a wind investment might be a better thing to do right now.
Anyway, these topics become relevant when the really big investors start to react on it. So do you reckon, is it better to be a bit late with investing than too early?
Being late might be a good thing if things develop well, because then you can wait a bit. But if we're in a crisis or things develop badly, then to be early is much better. And actually there is one topic where large investors have started to change their course, and that is on the whole topic of climate change and investments in fossil fuel companies or coal companies. Actually, there is a very big investor, actually it's the second largest sovereign wealth fund of the state of Norway. They have decided to divest their investments in coal companies. So they are selling the companies. And the reason why they are doing that is represented on the chart here. So we can see here two pies, a blue one and a red one. And the blue one is the reserves of fossil fuels from listed companies. So that's the valuation at the stock exchange. And the red pie is what we can burn if we want to achieve 2 Celsius degrees global warming. So we have much more reserves, and the risk is that the shareholders of the large companies will lose some of their investments because they cannot burn all of that stuff. And by the way, the Norwegians are not the only investors that are divesting from coal companies. Also the pension fund of San Francisco, as another example, they have decided to divest. And the big question now is what happens if all or a lot of investors wants to sell of those companies, and you can imagine then it's much better to be early than being late.
Definitely. So me as an investor, how can I invest in these kind of interesting or future-orientated companies? And could you give us some concrete examples about such companies?
Yes, I think the most important thing is that you have an overview of your portfolio and whether your portfolio is invested in interesting companies, in the problems or in the solutions that we just discussed. And most of the investment reports that you get from your banks do not give an answer on that. So we can see on the chart how you can make such an analysis. So we can see here the portfolio or the footprint of a portfolio of a large Swiss foundation managed by a large bank. And what we can see here is on the right side, very few companies that have a positive footprint. We see about a third of the portfolio, which is gray, which means a neutral footprint or impact. And then we see a lot of red colors, and even worse, a lot of the investments, there is no transparency, so we don't have information what the companies are doing and how they're contributing to a footprint. So it's very important that you have a balanced strategy in your portfolio.
This is a very interesting analysis. How can I, as a private investor, get such information out of my account?
Yeah, you can. We have developed a tool called the Portfolio Footprint, which we do as an analysis. So if you have an interest, we can screen your portfolio and make an analysis on those topics. And actually, it's very important that you have invested in interesting companies. So better own Unilever as Coca-Cola, or BMW is more interesting than Fiat, or Wind is more interesting than coal. Google is more interesting than IBM on those subjects. And your traditional investment reports doesn't give an answer on that. So imagine there would be a Google Earth, not for countries or for places, but for your portfolio. But maybe that's a subject for another webcast next time.
Indeed, it sounds very interesting. Thank you very much for this conversation, Mr. Rinker. And if you, ladies and gentlemen, have any questions to one of these topics, please write us on this email address below. Thank you very much for watching, and we wish you continued joy in investing.